Here we are with ticker symbol HTBX, Heat Biologics Inc. And before I jump into this chart, I do want to state some things. If you learned something new, subscribe to my channel, hit the like button for me to let me know you watched this video, and share this with your friends and community. And don't forget, I've been posting down below in the description the videos on about the stock market and how the feds are going to continue to pump. And in that video, I share some information that I find very, very vital for the next coming weeks for you guys to be prepared to take advantage of these pumps and how these pumps have been going on for the last couple of months. So don't miss out on that information. If you haven't subscribed already, watch it. It's going to be worthwhile. If you find it informative and you want to know more about that information in the upcoming weeks, because I will be posting daily videos and weekly videos on the Federal Reserve pumps and the dates that are scheduled, do hit the subscribe button so you can benefit from that information and be well equipped and prepared. So let's jump into this stock. This chart here shows us two things that are very, very important when it comes to trading. And the first thing is that this is the highest point this stock has reached, right? 426, 430, 429 is the highest that this stock has reached in the last couple of weeks and even months. So something that I want to share with investors is if you came in at first example of 425 and the highest point was 430, you had 30 minutes to make a decision between getting in or out here. So if you came in here, you felt very bullish, you felt very strong about the company, and soon after it fell back down to 386, and in the next 30 minutes it hit a new high of 430. It tested resistance two times, but it couldn't use it as support because then it would close out the 30-minute frame at 383 and 388. So what I want to share with you guys is if you came in here, and I hope that you guys retrieve this information and use it to your advantage in further, investment decisions. And I want to do this brief and quick. I would suggest that you watch the 30-minute frame of the next one, and if you get back to the point where you're about to break even or you're even going to profit 1 cent, I'd get out. I get out because you have uncertainty here because this is the newest high and you don't even know if new highs will be attained because look what happened quickly after. It fell. It fell sharp. It fell to a point that it hit a new low of 261. I mean, that is a big difference. 431 to 261, that's almost a $2 difference. About $1.70 in difference. I mean, that is surprising right there. So something that I want to give as an advice is sometimes we want and we let greed kick in. We want more profits. Whether you came here or you came in on that same candlestick at 386 and you saw it hit 420 and then it fell back down to 382 and you're holding and you saw it go back to 416, 417 and just anything, even $4, which was the resistance point, I would clock out on that stock because it hit resistance already and it got rejected. And the chances of it getting rejected, as we can see here, are highly likely again. And even if it didn't get rejected and it continued the run wasn't going to be for much because it did break the resistance point two times quite significantly, 30-cent difference, and it couldn't hold it. So even if I was to see this stock continue a run, I'd be happy that I got out from 380 to $4 and made a 20-cent difference or 10-cent difference than to have hold and hoped and end up right there about to break even and already the next steps was losing all the way down to the lowest point of 262. And the reason why I'm stating this is because a lot of investors, especially first-time investors, they've only been in this for a couple months, beginners, they tend to make these mistakes because I remember when I started investing, I made these mistakes and I get greedy. And something that I use an example for everybody all the time is if you were to trade 5 times in the week and there there's there's 5 trades that you do And those 5 trades, out of the five, 4 of them are $2 losers. You bought in at at whatever price, and you're losing $2 on each one. That's $8 loss, right? And then your fifth trade, you buy in and you make $8. You made $8. Woohoo. And a lot of people feel like when they make that trade that they made $8 in, they cancel out and forget about all the ones that they lost $2 in. And it took 4 trades throughout the week to lose those $2 ones. And even though it's $2, sometimes as traders, especially when we're beginning, we tend to lose track of how much that is in total. And if you do the math of the 4 trades that you lost $2 each throughout the week, you don't feel it all at once because it happens here and there. And then that one trade that you made $8, when you look at it, you broke even and you're in the same spot as when you started. So I changed the way I look at trading, and I rather make 4 trades, right? And in each one make $2. And that my fifth trade, worst case scenario, if I don't make $2 again, I lose $2 and I break even in a state where I'm not breaking even on losses. I'm breaking even positively. And that brings me to make $6 over making one big one of $8 and losing little chunks in 4 of them of $2, which equal $8 loss, $8 gain. When I do 4 of them and I make $2 each on 3 of them, which is 6, and then lose most likely, or hypothetically speaking, on the fourth one, $2, and turns out I've stayed positive $6 and I lost $2. And continuously doing that over time, it compounds. So where I'm trying to get at, hypothetically speaking, with these small numbers and just keeping it simple, this is all hypothetical. The theory is to always stay positive, whether it's 10 cents per share or 5 cents per share, rather than holding and ending in a position where you're 10 cents negative per share. And that's already hitting your portfolio and your performance. So I hope you guys take that and it means you guys well. I'm just stating it out of my own kindness, my own experience. And I just want to encourage you guys to focus more on profits, whether they're small profits, rather than trying to hold for that big chunk of gains, when sometimes you can make small portions of gains, and as long as you're gaining, it's worth more than one big chunk of a gain and have lost throughout over time, that sometimes your losses are outweighing your gain no matter how big it is. So keep that in mind. So support level was broken through. Bears tore this one apart. And let's move this to their new location. So the 50-day moving average is just a few cents above the closing price. And another thing too is this is the true resistance level, 430. Until the bulls don't break through that, there won't be new highs tested. The bearish run will actually start to end, and the bullish run will start to continue and take full control here, because anything in between this resistance level of 317 or 318, 317, and anything between that all the way up to 430 is great for the bulls to get closer to that resistance level and break through new ones. But the new highs and the true resistance levels that need to be broken will be after 430, because that is the highest point this stock has reached in the last couple of months. We can go all the way back. And that is very significant here, because that's the point of rejection. And here we are now with new resistance levels and support levels. So the bulls need to break through 317, use it as support, and they can start to work their way up. The 50-day moving average that is turning this stock into bearish grounds is actually 313, which is above the closing price of 309. It's a very close one. The tug of war is going to be interesting and significant tomorrow morning and throughout the day. But 313 right now, until that's not crossed over, and then obviously this resistance level of 317 is used as support, the bulls have no say in saying, oh, we've gained control, we have a shot here. They need to test it, use it as support, and work their way up further away from the 50-day moving average in an upward trend. On the other hand, the Bears want to break through 261, and if they're able to break through that, they'll go ahead and bring this one further away from the 50-day moving average, breaking through the support and bringing this to newer lows. Two things can happen. The Bears gain full control. I'm not saying that if they do, they broke this chart completely and destroyed it, but they are starting to gain control. Or the bulls can take advantage of any price down here and bring this one back up, but they're going to have to stock up on stocks and rally it up. So that's going to be a lot of effort for the bulls to bring it back up from there. So this is going to be interesting tomorrow. Keep a close eye on it. We'll see how this one plays out. And as always, if you learn something new, subscribe to my channel. Hit the like button for me to let me know you watched this video. And share this with your friends and community.